Welcome to June 9th. Alphas have SLB now at 29%, but it's a sad story. We had a fallback. We fell back to 68.97 on the scoreboard, which is going to put us at, you can see from the opening slide that we're at 24.6 on the year to date, and the SPY is still at 13.2. So we're still beating them. Excuse me. So let's go on to the numbers. We had a pullback, but now notice that we do have a dipper here. So if we can get to that 40.56, no, we don't use the dipper. If this trade goes beyond 30 days, then we'll be going up to the stop. We'll be going here. Remember, if we're not in profit within the first 30 days, then or we haven't exited the trade in the first 30 days, then we're going to go to last bar low, and in the last 60 days, we're going to go to last bar low. So those are the rules right there of the Elvis engagement, and that's what's going to be happening next. So now that we have an idea of what we're going to be doing in the future, we know our exit, and that's one of the important things in trading is that you got to know your exit before you get into the trade. You got to know how much money you're going to put for the risk. Now, risk management. Let's dive on that just a little bit. My risk management is 10%. That is that no trade is going to be bigger than, if you go here and drop off the numbers, you have our risk capital or per trade is 689. That's 10%. Then that now you knowing that we have 100 shares per contract, per one contract, that means that we can get a share up to 689, 690. I'll fudge a little bit as long as it stays within the 10% range, plus or minus up to 10%, but no 11. If it hits 11 or better, it's done. I'll go to 10.9 if it happens. So that's the point of risk management. The risk management is the 10% allocation for accounts under 25,000 because you want the accounts to grow and you need to grow fast. So that concludes on SLB. Our stop is here at the 33.39 at so if this retreats and hits back, we'll lose all our 29% and maybe a little bit more, maybe even 5 or 10% if it was to return all the way back. We still have a nice incline in the increase on the 10 EMA, and we're not above the 8. We're just at 80 on the stochastics, and RSI is 70. So there's still plenty of running room here. Just as Jerremy Newsome, one of my teachers, would say, rest after battle. And you can see we had a pretty good battle right here. Look, 3 good strong candles. Take a rest, a little accumulation, and then up. In OTA, this is called rally, base, rally. Base, rally, base, rally. So we'll go on. So, but as long as we maintain our risk management of not more than 10% on the initial part of the trade, and then closing the trade to the EP, therefore reducing our risk way down into the lower numbers of that 10%, we're able to take opportunity for the trade and protect capital. Okay, let's go on to KR. And here at KR, again, the market was in a pullback of some kind today. So we had a pullback, but our exit is sitting here at still sitting here at 37.25. We already have cleared the gantry. So going on to Capri is the one that has yet to clear its gantry. Yes, that has yet to clear its gantry. There it is. You see it came up, did not clear the entry point. Cleared the entry point for the initiation, but it didn't click the full candle above. So our stop is here at 51.90. And every once in a while, if you're not sure, you want to always make sure that you check your exit to make sure that it's running at 51.90. There it is. So that is an important thing of trade maintenance. So that takes care of the 3 positions. We're only running 15% for the trade currently. We had some pretty good numbers in the last couple of days. So let's go on now and run run the scanner. So today's lesson was remembering risk management, 10%, and then and knowing it's 100 shares, that makes 1%. So 1% of capital tells you about the maximum of what your shares will be looking for when you find something available. We still got 4,569 in cash. So this account is not hurting. It's holding its ground. We still have a lot of buying power here. So let's go on to the scanner. And here's the scanner for the uptrend. So we're going to run the scanner for the uptrend. And I was testing it earlier today just to see what the general market. And I do this every once in a while just to make sure that my scanners haven't had any kind of electronic glitch and I've lost data, which very rare does it happen. You know what? I'll give you guys a sneak peek. If you guys were doing this scanner on the open market, let's go ahead and close this. Let's give some running room here. And let's see what the scanner says. If there's anything qualified, because it's been a pretty much of a flat up and down market. So, oh, well, look at this. Look at that. 28 positions qualified under the open sea market. Now, I can tell you real quick, a lot of these I don't know, and a lot of these are not in Dominion. Dominion I do know, but Dominion is not in this. It's not in this group. Dominion is in the private reserves, and they're running what they call the BBM. That's the BBM strategy known as Boing Boing Modified, and that one is for the members. So Piper came up pretty good. So let's go and peek at Global Star. It's a penny stock too at 132. So we'll go right click, come down here to the send to, and then auto respawn, and then zoom in a little bit. And you can see that I'm already tracking this to see how it's working. And there it is. There it is. So now remember, this trade is not a recommendation because I have no idea what the options are. For penny traders, yeah, penny traders would look at this and say, oh, you know what? The entry is the entry with the low would be this low here. That's your dipper low, and that's your swing low, and that would be 116. And your entry is about 140. So 116 to 140, 115 to 140. You're talking about 25 cents. Correct. So you're going to risk 25 cents to make 75 cents. And that's how your penny trade would be. Let's go on now and run the scanner now for our own group. And that is right here, Alpha. And go Alpha. And oh, look, we got two. We have two that are going to be looking at. Let's go ahead and look at those quickly. And I know these qualify because why? Because they're on the lost leaders list and they owe me money. That's right. So when they owe me money, they're on the list and they will be investigated. Question will be is, do we have what is it? Now look here, I have previous notes. The SOT entry closed, but the AB was too wide back in April. So how would I set this up? Here's my high point. There's my dipper low right there. There it is. There's my setup, and I'll do the details on that a little later. Come down. We're now going to Arena, and Arena is ooh, real quick like. Yeah, and Arena is this high. There's the dipper low right there. Boom. And it's approximately $2.50. And the ATR is $2, so that's pretty good. And that would be Arena setup. The next question will be would it meet the criteria for the options? Okay, so that's it for the upside. Let's do the downside before we run out of time here. Load up the stochastic downtrend and for the alphas and run it. And there's nothing there. So we're going to be focusing on XLU and Arena for tomorrow. So with that said, we're going to close out today's report of Losers Become Winners. Alpha SLB at 29%, and the account is still in strong positive territory. With that, I thank you very much for stopping by and checking out. Do subscribe. Do drop me some questions. Bye-bye. Take care. Bye-bye.